Hi everyone, thank you for coming along today. We had a very quick introduction to our panelists, but I'm going to invite them to tell us a little bit more about themselves. My name is Niki, I'm with Contentworks Agency. I've been in the fintech sector for about 17 years, and 7 years ago set up my own agency, about the time that the 2017 ICOs took off. And I've been a kind of cryptocurrency enthusiast for a lot longer. Bit of a hodler here. It's great to see how things have evolved, and I'm really excited to hear from this group of people. What are the new things to be looking for? Mihkel, do you want to just tell us a bit more about yourself?
Yeah, hello. My name is Mihkel. I'm the co-founder and chairman of Klarpay, like also last year. I'm still there. And Klarpay is the biggest regulated fintech in Switzerland, so that's what we are.
Hi everyone, my name is Mo. I'm the CEO and co-founder of Fuze. We are based in Dubai. We are digital asset infrastructure for Middle East, Africa, and Turkey. Started 2022, funded by the Abu Dhabi government and scaling quickly. First time in Cyprus, love this place. Great to be here.
Hi guys, my name is Rikke. I'm the CEO of Coinify. And Coinify is a crypto payments company. We're based in Copenhagen, and this is also my first time in Cyprus, and I agree, it's lovely here.
Hi everyone, I'm Elina. I am a lawyer, so I think I'm the only lawyer on this panel. So with a background in financial services and crypto, I think we'll have a very interesting conversation here today.
Excellent. And as we said earlier, you're going to have the QR code for Slido. We'll leave some time at the end for some questions, and please do so on the app. Right, let's kick straight off. I'm going to start with you, Mo. How can blockchain technology and cryptocurrencies transform the existing financial ecosystem to be more inclusive and efficient? And what do you think are the main barriers to integration?
Yeah, so my background has been in fintech and payments for about 15 years, and we started Fuze because we saw across Middle East, Africa, and Turkey, consumers were not served well by banks. I think after spending a long time in fintech, I realized that fintech is lipstick on a pig, right? So you take existing banking products and rails and you add a layer of an experience on top, but it doesn't really improve the customer experience, doesn't really add to margins. There's still a lot of leakage that happens as well. So the idea for us was really to help move the Middle East, Africa, Turkey region forward, bring finance on-chain, and really open up new opportunities for many people. With a simple internet connection, you can get access to credit, you can get access to opportunities to create wealth, and this is what we're really all about. In the part of the world where I'm from, if you go to certain markets like Egypt, Turkey, Pakistan, people are buying USDT or USDC only because it's hard to get physical dollars. And as inflation goes up, their currencies drop. People are looking for a way just to retain wealth, and crypto has been that answer for them. If you go to markets like Nigeria or Lebanon, people are paying for taxi rides with Tether, right? They're finding ways to conduct commerce, they're finding ways to create wealth and value without relying on traditional banks. So this is why we feel that for us in the region that we're from, there's a lot of opportunity, and we really want to drive out infrastructure and all the pipes and plumbings to make it easier for the builders and even some of the banks that we're partnering with who want to offer products using crypto or a blockchain. Also, I think some of the barriers that we see, and we were just talking about this, is it's still a lot of work to bring regulators and banks and the more traditional ecosystem participants forward into this world. And obviously this is something new. It gets scarier when you see headlines like somebody's wallet was hacked, or FTX or Luna, and there's been so many bad actors and so many bad players. I think what we do, and I'm really happy to have so many strong people with me here on the panel, is we really have to change that narrative, right? We have to show that many of the failures that happened in crypto was not because of technology or because of the products or services, it was because of the people, right? And if we have stronger governance, regulations are important, getting the right frameworks is in place is super important. Having strong compliance is super important. And with all these basic building blocks, we can really make it easier and better for the more traditional banks to kind of come on board, for more of the traditional players to come on board. One of the things that we're doing is we are selling crypto products into banks, telcos, legacy businesses, trading companies. And the business guys always say yes, but then convincing compliance and risk will take us 3 months or much longer, right? So all these things are happening. I think that it's a ecosystem push that has to happen. But if you look at things like Bitcoin ETF, Ethereum ETF, some of the recent cases in the States that have happened against Binance and some of the other players, right? The industry is becoming a lot more regulated, it's becoming a lot more clean. And I think we're starting to really move in the right space. And it obviously helps that Bitcoin's above 70,000, which brings a lot of people back into the space.
I think that's really a really interesting conundrum that you brought up a little bit earlier regarding with the central banks. And this is something I wanted to ask Mihkel about. What do you think, I mean, there's a lot of people in the cryptocurrency fraternity that are quite skeptical about central bank digital currencies and that sort of vigilance, that mechanism for vigilance. While it could be seen as a good thing, we're going to get a streamline of anti-money laundering, what do you think is going to be the trade-off for users adopting CBDCs rather than, say, Bitcoin, which offers greater autonomy?
I think people have a little bit of a misconception a little bit about Bitcoin. Bitcoin is pseudonymous. That means all your transactions are available on a publicly open blockchain. And that means that if you do something, it's going to be there forever. And crypto compliance experts, they know how to monitor and track the fund flows, and sooner or later you need to convert it into something that you can buy bread with or pay for your car or something. And these are the endpoints where the identity element comes also into play, and where the kind of anonymity goes away. Talking about this government side and this big brother is watching you, I think the aspect is a little bit from a different angle. The aspect, or the counter-argument against CBDCs is that CBDCs, not like Bitcoin, that's publicly available and then everybody it's a community-driven effort. CBDCs are issued by a central government, and the threat is that the CBDCs are also programmable, which means that by proxy, the government could tell you, like, no more meat for you, lovely lady here in the front. You can't buy any more meat. And I think that's rather the debate that we should have when it comes to the vigilance or the controlling of the thing. The AML aspect of it is people have the illusion, as I said, that it's very anonymous, but actually the AML aspect is negligible.
Yeah, definitely. And actually, I'm just going to skip a little bit and go to Alina on this. If you want to tell us a little bit about the current state with MiCA in Europe at the moment, whether that's going to be something that is going to be moving things forward or holding Europe back.
Sorry, can you say that again?
So regarding the MiCA in Europe, it's a bit of an echo in here. Are people hearing us well? Are you? Okay, great. So, we've talked about blockchains, distributed peer-to-peer network, and the architecture. It's often at odds with data privacy laws like GDPR. In terms of the concept of centralized control of data processing, how do you see this conflict developing in light of crypto becoming increasingly mainstream? And just to add something onto that, if you want to bring in what the current state of MiCA is doing for Europe as well.
So I think the privacy versus transparency debate essentially comes down to the nature of the technology. So like you said, everything is available on the blockchain and is accessible. But I think there are different ways to look at what the privacy aspects of this are. Because on the one hand, you say, oh yes, it's all public, it's all transparent, and this and that, and you have a GDPR which always assumes that there's going to be one centralized controller, which is completely at odds, obviously, with how the technology actually works. There's no, centralized person that is in charge of directing, who accesses the data and how it works. At the same time, though, I think it's also important to acknowledge that you can leverage the nature precisely of the technology to use it in a way which is in fact rather privacy friendly, you would say. So you've got concepts like zero knowledge trust. You've got the idea that it's decentralized. There's no one central controller that can access it. So in that respect, I think it really comes down to how the technology is actually discharged and implemented and used at the end of the day. Where you would see the real conflict arising is when something goes wrong, who do we blame? But quite frankly, that is something that you have more broadly in this topic. When something is decentralized, everyone says, oh, it wasn't me. It's exactly the same concern, but in the context of privacy. So it's something to look out for, but I think it's the same challenge and the same hurdle that we see with the nature of this technology more broadly, rather than something that's a particularly big chapter and a hurdle in its own right. Now, I wanted though to add to that, and it's something that you kind of touched on, Mo, which was it is important to generate trust for this to be able to go mainstream. So what regulation is trying to do, what MiCA is trying to do now with its incoming in December, is exactly, I think, to leverage known solutions, so to speak, so known from financial services, because it's all common concerns. You've got protection of client assets, you've got insider dealing. It's always the same concerns that people are trying to deal with, and it's just that this particular market, crypto, because it works in a very different way, you need to take those concerns and find solutions for them. So I think that regulation is going to go a long way, not only for data protection, but in a lot of other areas to help generate trust in this sector, in this particular technology. And then that's how it's going to become mainstream and more well utilized.
Mo, I want to ask you a question for somebody who comes from another region. Do you think that the Europeans' approach with MiCA is going to actually strangle innovation, or do you think it is going to do what Elina is saying, Elina, is actually help generate greater trust and therefore kind of be a lift for cryptocurrencies?
Yeah, so we are regulated in Lithuania, we're regulated in Dubai, soon in Turkey as well. So we're making sure that we're always a regulatory conservative company. What we've seen is that the MiCA framework is definitely very stringent, right? I think we're going to see what the final one looks like, and then I probably have a better view on what that is. But I think in general, if you look at the framework in Dubai, so we were the second company ever to be licensed in Dubai, and it was a very difficult process. But being a regulated company is 10 times harder. Like, we have to submit reports on all our wallets, on our customers, on a weekly basis, monthly basis, quarterly basis. The Dubai regulator has these tools in the background that looks at on-chain transactions and on-chain movement of customers' funds. And so it's extremely difficult, but I think that's because whenever you're dealing with money and exchange of value, it's really about trust, I think, as you were saying, right? People want to trust wherever they put their funds. They want to trust, just like the way that people trust banks, they want to trust a crypto exchange or a crypto product. And that's why I think that it's important for regulators to be as robust as possible, and they really have to hold us to the highest possible standards. Like, you guys are a bank. I'm sure the requirements that you have from a compliance and AML perspective are very tough.
Rikke, I'd love to get yours and Coinify's take on this.
Yeah, so at Coinify we do crypto payments, and we actually seen a lot of adoption over the years. And I think definitely the regulation has helped this. When I started in this industry 6-7 years ago, none of the serious players would talk with us. But now we have relationships with all of the biggest PSPs and a lot of the banks, and actually in general, it's all type of industries that are taking on crypto payments. But I think to the panel's point, the trust element is super important. Because there is still a lot of skepticism around how do crypto payments work, and are you fully compliant? I mean, we are based in Copenhagen and regulated by the Danish supervisory authorities, and soon we will fall under the MiCA regulation and get a PI license. So you can say we recognize that all of our customers need to put this trust in us for them to conduct business with us.
Okay, excellent. I'm going to stay with you, Rikke. While the future is undoubtedly digital, cash isn't going away anytime soon. How do you think regulators are going to deal with that gap between the valuation of fiat and CBDCs of their countries?
Yeah, I was thinking about the question, and actually coming from Denmark, I do feel like cash is going away. The Danish central bank is phasing out the largest notes we have, and maybe 85% to 90% of payments are done electronically now. So I think in some parts of the world we are actually seeing a slow phase out of cash. The Danish government is also toying with the CBDC and trying to figure out, how can this be implemented? They are looking to the e-Euro project as well, because they recognize, our native currency is pegged to the euro, so it makes sense to keep kind of this link. But we still see some big challenges around both the regulatory framework, how is it going to be issued, and how is it going to be distributed, and they are also slightly concerned about, this interoperability. How is the actual exchange going to happen? How do we move from the current fiat money into this CBDC, if we want to call it? And again, a general education of the population. How is this going to work? So I think we are still some steps away from this happening, yet I will say that we are moving towards a cashless society, and I strongly believe, at least in Denmark and maybe Scandinavia, that cash will be phased out shortly.
I want to come back to that in a second, but first there's something I wanted to ask Mihkel. I mean, and what you were saying about Denmark being a bit far away. I mean, even in March, Jerome Powell, the head of the Fed in the US, said that the US is a long way away from that yet. Do you think that's going to be a bit of a setback for the greenback in terms of its world dominance? I mean, there's already been this move towards de-dollarization. I love that word. Anyway.
I think it's a little bit like this tinfoil hat question, or this tinfoil hat guys thing. You have to see the US dollar after Bretton Woods is the biggest currency in the world. It's in global trade. There is nothing compatible there. I mean, the BRICS are trying now to do something with the commodity-based currency. No offense, but I mean, commodity prices are also very volatile. So, in the end of the day, today there is nothing really that can beat up the dominant position of the US dollar in global trade. And your question is rather like, what can a little fly to an elephant? Like, if they come a couple of months later or a year later, I don't see that it will somehow affect the dominance of the dollar on the thing. So I think this call is a little bit early said.
Right. Alina, cashless society, what do you think? Is that going to be inclusive, or is it actually going to push society further apart?
Sorry, I didn't hear the
question. So for example, a cashless society. When cryptos first came out, there was a lot of talk about the unbanked getting the opportunity to be banked, more inclusiveness, it not being centralized. The whole nature of it is about being decentralized. But do you think now, with the bigger players coming in, your central banks, and perhaps the people that understand the technology better, whether you're going to actually see a greater divide within society? Like, for example, I find I don't have coins to give to people on the street, or...
I'm always of the philosophy that every revolution is an evolution, okay? It's always the same concern. So little changes along the way, you eventually look back and you realize, oh, things have really changed. So for example, now we take instant payments, for example, as a given. That was entirely unheard of not entirely long ago. So I think it's important to keep a perspective that at the end of the day, people care about the same things. They want property, they want access, they want their privacy. And if the technology is able to deliver that, and if it's able to, let's say, agree with the overarching policies of your regulators, your governments, your politics, your whatever, then there is no reason why the technology would not be adopted. It will be adopted. I think the question that we're looking at in practice is whether all of these things, rather when all of these things will come together, because there is clearly a desire by people to use the convenience that is offered to them from the technology. So I don't think there's anything as such standing in the way of the technology in principle. I think it's a question of how will it develop, will regulation be flexible enough to allow it to flourish? Will regulation operate to hold it back? Will there be setbacks or, particular scandals that, move you forward or pull you back? So all of these things, in the grand scheme of things, will not change the adoption of the technology. They may just delay it or push it in one direction or the other. But ultimately, I think it's a positive future as far as I'm concerned. The technology isn't going anywhere, and there's so many, like the internet was said to be a bust once upon a time, and here we are, we can't live without it. So maybe we don't understand exactly how it's going to look like in the future, but I don't think it's going anywhere. I think the technology is here to stay.
All right. Well, we're coming close towards the end, and I want to leave some time for questions. But before we go, I want to ask each of you your kind of outlook for it. Warren Buffett, the Oracle of Omaha, once famously said, in terms of cryptocurrencies, generally I can say with almost certainty that they will come to a bad ending. Well, I think we can safely say that he might have been proved wrong there. What's your take on it, Mihkel?
I don't know. I really like this forward-looking statement and this forward-looking. So I took my Chinese Chen so that he will tell me the future. I didn't have a crystal ball, so I took my Chinese thing. So what do you think? What's going to be the future? First of all, Warren Buffett's statement is a little bit different. Warren Buffett looks for assets that have an intrinsic value, and he says very straightforward that Bitcoin in his statement doesn't have an intrinsic value and neither pays dividends or grows something. So that's why he's very skeptical. But I mean, looking a little bit like in the forward-looking statement, because that's what you think is. First, I agree with Mo. Crypto is going to be more and more regulated, especially if you look at the whole meme coin craze. I mean, it has to be handled. It's just not fun for the average Joe investor. Crypto itself, I think, Bitcoin specifically, we will see it as a storage of value especially because of its independence and its distributed nature. So it will definitely have a spot next to, let's say, gold or some commodities that people hold for storage of value. And my third statement is I'm very bullish on blockchain and the whole technology. I think blockchain as a technology will bring some nice new innovation into the whole financial sphere with the public ledger system, and especially with the programmability of contracts and everything. Am I right? He's right.
Mo, what's your wild prediction?
Yeah, I think for me, just going back on the previous topic, I think the easiest thing for everyone to understand is payments, because we do it all the time. I think that payments will definitely move to a blockchain. We're going to see a lot more of it. I think in the end, people don't care if it's Web 2 or Web 3 or blockchain or not. All they want in payments is just simpler, easier, cheaper. And blockchain has the ability to do that. Merchants can get liquidity. They can get settlement much faster than Visa or MasterCard or Swift and all those things. So I think we'll see a huge proliferation in terms of crypto and stablecoin and blockchain in the payments world first. And over the next 18 to 24 months, I think that's going to be the big, big trend.
Yeah, and I agree with my fellow panelists. I think this theme around blockchain, it's not going away. It's too big now, and it's too integrated into every industry. So, you know, how it will evolve over time, to your point, we are uncertain, but for sure it will evolve. And the theme, as I call it, it's not going away. It's here to stay.
Elina, do you want to give us your quick prediction before we get to the questions?
So I think I already gave away my opinion with my previous answer. So yeah, essentially I think it is here to stay. Like I said, I think the question is, it's unclear what it's going to look like, but I think there's definitely a place for it, not only in finance, but also in other uses. So in our work, in our advisory work, we've seen some extremely interesting concepts. For example, very interesting ways of using. One we worked on recently was a solution for data availability issues. So there are very varied ways in which the technology can ultimately be used and then also be connected into the financial system one way or the other. So I think we should all keep an open mind about how the technology can be applied, really look at its benefits, and when you look at it from that perspective, I don't think it's hard to come to the conclusion that there is definitely a place for this in the future. It just might not look like, you know, the ICO drama of 2017, which perhaps we're all grateful for. So, yeah, so essentially
Right, okay, so let's go straight into the questions. Actually, before we go into the questions, can I just have a quick show of hands? Who owns cryptocurrency in this room? Great. I just want to say that 5 years ago, I went to Decentralize, which was a conference in Athens that was all about blockchain, and the same question was asked. And I can definitely say that even with a room full of technocrats, it was a much smaller number than of hands up than what I saw today, so that's kind of interesting. Right, first question, do you see traditional banks integrating blockchain in their operations right now? And if yes, any specific blockchain? Mo, what do you reckon? Question for you?
Yeah, I mean 100%. So you see a lot of the big global banks are doing stuff. They're tokenizing their deposits. They're using it for payments. Citibank has launched Citi token services. BlackRock said that they're going to do $10 trillion of assets will be tokenized. Charles Schwab, almost every bank in US, Europe is doing something in the space. And they say that 2/3 of the Fortune 500 are now doing something in Web3, right? So that adoption's coming. They're testing it out. They have teams working on this stuff, so it's definitely happening.
Right. Which country will be the next to have license to purchase and sell cryptos? Cyprus is on this list. Elina.
Yeah, so I think with MiCA, obviously we've seen. Okay, maybe I should start a step back. So I think in a lot of places, you have been able to buy and sell crypto for a long time. I think the issue and the challenge has been that not in all of these places have you been sure whether you're doing it the right way or if you're allowed to do it, if you're not allowed to do it. That's one of the reasons that I think MiCA is a great piece of regulation, because it offers a lot of certainty as to what you can do and what the right way to do it is, and how you should be going about buying and selling and anything else that it is that you look to be doing. So I think there's a lot of places where you can do it, but certainly in MiCA, what MiCA will do for Europe is standardize how that goes on and how you can go about doing that with a lot more security, both for yourself and for your clients at the end of the day. So I think I would say Cyprus and the rest of the EU member states are on a good road to that.
Well, I think we've got time for one more question. As these days we have Ethereum, what do you think will be the next ETF and why? And the writer thinks it's going to be Solana as a good candidate for that. You know what? Let's just make this a quick fire answer. Starting with you, Mihkel. One word.
One word, the next on the line of CoinMarketCap, I don't know.
This is not investment advice.
This is not
No, but I mean...
Thankfully, we have a lawyer on board.
The question is more like which financial products will be issued, so don't buy anything. But
Yeah, I don't think there will be more after this one for a while.
Yeah, I also think, let's see how it goes now with this.
Yeah.
I'm just a lawyer here, so
You're
I'm
not
not
a
going to
question you want to answer. All right, well, 5 seconds to go. Thanks very much, everybody. I'd like to thank my panelists. It was an excellent panel. It went much faster than I expected it to. If you have any questions, do come up and speak to people afterwards. We'll see you around over the next 2 days of the festival. Thanks very much.
Thank you.